Good morning and welcome to the latest Redwoods Dowling Kerr webinar. Today we welcome Murray Patt, founder of Alexander Knight & Co, Robert Yates, head of new business sales at Redwoods Dowling Kerr, and the lovely Jenna Caldwell, director of childcare at Redwoods Dowling Kerr. Murray, would you just give a quick introduction of yourself, please?
Sure. So I founded Alexander Knight & Co almost 10 years ago, and we are a firm of chartered accountants and registered auditors and look after lots of entrepreneurial owner-managed businesses in the northwest of England and further afield.
Thank you. Jenna?
Yeah, so I'm Jenna, the Director of Childcare and Education for Redwoods Dowling Kerr, and I've been with the company for just over 4 years now.
Thank you. And finally, Rob.
Yeah, my name's Robert Yates. I'm the head of new business for Redwoods Dowling Kerr, and I've been working here for 12 years.
Good. Thank you, guys. To those of you who are new to our webinar, on your screens you will see a question box. This will enable you to ask a question to any of our panels. If the question which you ask is relevant to the topic we are currently talking about, then I will bring that into play there and then. But if not, we will do a question and answer session at the end of the topics where your questions will be brought up. So we start our webinar this morning with a discussion on the job retention scheme, which is affectionately known to many as the Furlough Scheme. The scheme was launched with great fanfare in March and has now been significantly amended. So, Murray, would you please update us on the key changes which have been announced to the job retention scheme?
Sure. Well, first of all, I don't think anybody had heard of the term furlough until a few months ago, and now it's in most conversations, isn't it? From a positive perspective, the scheme was set up very, very quickly, and I think it's fair to say that companies were able to claim payments sooner than we all thought would be feasible. But certainly, there are a couple of downsides to the scheme. One of them is that certain sectors, such as childcare, found it difficult to claim for staff. And secondly, there was a big bugbear about to furlough somebody, the minimum period that you could claim for was 3 weeks. So that meant that in any particular month, you had to furlough a member of staff for a minimum of 3 weeks to get some money back from HMRC. So what the government have done is they have changed the rules with effect from July onwards, and I suppose the way I would class it is they're trying to wean us off that scheme. So whether businesses are able to manage being weaned off given the current economic climate is who knows, but they're trying to wean us off it. And the first thing to note is from July, this 3-week term will no longer be relevant, and therefore that means that you can furlough people for shorter periods of time, okay, which is good news. Good news. The downside to that is those members of staff to be furloughed from the 1st of July have to have already been in the furlough scheme. So in other words, somebody that hasn't been furloughed up until 1st of July, you can't claim for them through furlough. So that means that going back to this 3-week term, business owners have to decide really by the 10th of June. So that's just a few days away. Yeah, when whether to furlough somebody or not, so that they can potentially claim for a furlough grant claim for them from July onwards. So it's a difficult decision for business owners, and I think the easiest way of putting it is I think business owners should make a commercial judgment on whether members of staff who haven't participated in the scheme need to be furloughed. So that's one of the key changes. The other change that's linked to that, certainly in July, is that if you've claimed furlough, let's say on 10 employees, up until now, you can't claim furlough for more than 10 employees. Okay, so there's a restriction. So again, it comes back to the weaning off the scheme for us all. If we then go into August, the actual amount that you can claim through furlough starts to change. So, okay, we've got the positive of being able to claim for, let's say, part-time people that are being furloughed for less than 3 weeks. But from August onwards, the claim will just be for net pay. It won't be for national insurance, employers' national insurance or pension contributions. Okay, so again, weaning us off it. And then from September onwards, the amount that we can claim in the form of a grant drops. It drops to 70% in September, and then it drops to 60% in October. And again, just to be clear, that doesn't mean to say that the staff being furloughed only get paid 70% or 60%. Companies still need to pay them minimum of 80%, but the amount that the company has to contribute suddenly increases. So there's quite a lot going on. And I think, as I said, for business owners, the key thing is to decide on the 10th of June whether you need to furlough people that haven't been brought into the scheme before, number one, and on the 10th of June to think about the number of people that you have furloughed up until now for each claim, and think about whether you are perhaps in July or August, and let's face it, who has a crystal ball? We don't know what's around the corner, but to think about, do we need to increase the number of people to furlough, because from July onwards, you're restricted.
Okay, thank you. So just to clarify on the government advice is quite confusing when you read it. So the job retention scheme closes on the 30th of June. The deadline for new furlough registrations is the 10th of June. Is that correct?
For staff to be furloughed, the deadline is the 10th of June, correct, because the minimum furlough period before the 1st of July is 21 days, it's 3 weeks. So yeah, that's right. So
if somebody wakes up on Thursday morning and thinks, I want to furlough those 2 guys, that's it, too late, you can't do it.
Unfortunately, yes. Unfortunately, that's why I go back to it is a commercial decision. And you have to think about what is in the best interests of your company and also your staff. And the two may not go hand in hand, unfortunately.
Okay, so if business owners have already furloughed staff, do they need to take any action, or can they just adopt the new part-time rules from the 1st of July?
It all depends on whether they've got additional members of staff who haven't already participated in the furlough scheme. If a company with 10 employees and they furloughed all those 10 employees, then there's no action they need to take before the 1st of July. But again, if that same company with 10 employees has only furloughed 6 of them, then they need to think about, what about the remaining 4? Will there be a furlough claim, or would it be necessary to make a furlough claim for them at some time in the future? Because if you don't do it for the 10th of June, you won't be able to do it afterwards.
Okay, so one of the benefits of the amended furlough scheme is it provides a safety net as far as this cliff edge concept came into play for the end of July. But with effect from the 1st of July, employers will be able to bring furloughed workers back on a part-time basis. Please, would you explain how this works?
Well, I think this is, in my view, this is how the furlough scheme should have been designed in the first place, in that if you want to bring back a member of staff from furlough, you can bring them back, you can pay them under the normal terms of their contracted employment, and then if there is no work available for them, you can furlough them again. So therefore, your furlough claim for the month of July, for instance, will literally be based upon the number of days that they have been furloughed for, rather than, under the current rules, the furlough claim would always be based upon a minimum of 3 weeks. So there's a lot greater flexibility from the change to the scheme. So I see that as a real positive. But as I said, the devil is in the detail, and the issue is whether you need to furlough people that haven't already participated in the scheme.
Okay. And is there a minimum number of hours which an employer has to provide from the 1st of July?
I'm not aware of that. I would look at it as the furlough scheme is giving employers complete flexibility to furlough members of staff for days here and there.
Okay, so with that in mind, how do you envisage that business owners will use the changes to the scheme to ensure they receive maximum benefit?
I think it's a nightmare. I really think it's a nightmare, and it's a difficult thing to do. I refer back to, I said crystal ball time, but it is crystal ball time. We're hoping that the government are doing things to kickstart the economy, but who's to say there's not going to be a second spike of in terms of the coronavirus? So as I said, I think you have to make a commercial decision as an employer and decide whether it's in your interest to furlough additional members of staff as at the 10th of June, because you may need to claim for them in July, August, September onwards.
And they've got till midnight tomorrow to make that decision.
Yeah, the other thing that is very frustrating here is the government have released quite a lot of guidance associated with furlough schemes and things like that, but the changes to the rules, the additional guidance isn't going to be released until the 12th of June. So 2 days after, you have to make a decision on on whether you should furlough people that haven't already been brought in the scheme. So again, it doesn't quite work.
We've just had a question in from Mark, which is a very good question, and one I wondered about actually. Although I think that the payroll pay as you earn date is actually March, but Mark's asked, can you confirm that the employee being added on the 10th of June or before the 10th of June still needs to have been employed as of the 28th of February, i.e. it cannot be a new employee employed since the 1st of March?
As far as I'm aware, that's correct. That's correct. So the RTI, the payroll submission for that new employee needed to be by the middle of March. So
yeah.
it still means you are restricted on the number, or let's say the pool of people that are available to be furloughed.
Okay, thank you for that, Mark. So obviously, as we go through July, we then hit the 1st of August, and the 100% contribution of furlough to pay the 80% from the government ends. So with effect from the 1st of August, employers will have to contribute to the furlough scheme. Please, would you advise what contributions employers will have to make?
Well, the easier way of looking at it is what you don't have to do when you do your furlough submission, because when you do a furlough submission through the HMRC's portal, you, amongst other things, you fill in 3 key numbers. The first number is the pay, the 80% pay that you're claiming on. Then the second and third numbers are the employer's national insurance that's due on that, and the pension contribution that would have been payable on that. So obviously from August onwards, 2 and 3 disappear. So it's just literally based, from
1st of August.
1st of August onwards. It's literally just the first sum you're going to be claiming for, which is the net, essentially the gross pay.
So does that represent around about a 5% contribution from the employer?
I think it depends on the level of pay that the employee is on. I know that again in the guidance the government have talked about the percentage that it accounts for, but again this is all about trying to wean businesses off it. And in terms of the change, it does make it's logical to take that element of the claim away, because actually calculating it can be quite difficult anyway. So if you base it upon gross pay, it's a lot easier, but it will depend on how much people pay, because obviously there's a national insurance threshold to take into account. But if you've got higher paid staff, and okay, bearing in mind the amount that you can claim through furlough is £2,500, there's more national insurance on the £2,500 salary, as opposed to, let's say, £1,000 salary.
Okay, and then September and October, what happens?
September and October. So again, the furlough claim will be based on just completing one box, but again, it will be gross pay, but rather than the 80%, it will be 70% and 60%. But it also means that the cap, the £2,500 cap, reduces as well. So the cap for September, rather than being £2,500, is 218,750. For October, rather than £2,500, it's 1875. So again, it's logical in terms of how it's doing it. It should make the claim simpler to process for employers, but it also means you are claiming less money from HMRC.
Okay, so as we look forward, the big change, it obviously depends on how many employees you've got, but you know, many employers who have zero or very little income, or their income is down 80–90%, will have to seriously consider what they do with headcount moving forward from the 1st of August. Do you think that there'll be many employers who will seek to reduce their headcount when the employer contributions commence from the 1st of August?
I do, and I see that also the number of business failures will dramatically increase, because up until now, the cost of the employees being furloughed is being covered in financial terms by the furlough scheme. But from August onwards, companies need to make an increasing contribution towards their staff, be it those staff that are being furloughed or those staff that are working. So I think it's a very difficult position. I think businesses, if they haven't done so already, first of all, need to take some advice, but secondly, need to look at the other areas of support that the government are offering, and that may be the loan schemes, the business interruption loan scheme, bounce back loan scheme, things like that. But again, it does mean that if anything, we've got a time bomb ticking, and actually we may see some substantial business failures in August that may be in September and October.
Okay, thanks for that. I'd just like to do a quick poll now for people who do own a business or are in charge of staffing and resources, just to get a feel for whether or not you feel, and this is a confidential poll, whether or not you feel that you would envisage that you would be reducing any headcount during the next 3 months, and also just to get a quick feel of whether it's yes, less than 10% of existing headcount, 10 to 25% of existing headcount, greater than 25%, or that you're pretty confident you won't need to reduce any of your headcount, and that would be just a straight no. So we'll just do a couple more seconds on that as people are completing. 3, 2, 1. Close the poll. Thank you very much. So last time you were on, Murray, we were talking about some bank support. We were talking about the CBILS loans. Since we did that webinar, they then launched the very catchy title, Bounce Back Loans. You gave us a great overview. I guess, where are you now? Has the position since we last spoke with the banks changed? Are they still struggling to cope with the deluge of applications and making inconsistent decisions, or is the application process more seamless now?
I still think and this is from the clients that I look after, bearing in mind that I have been heavily involved in lots of client applications for both types of loan schemes. So the banks are still struggling with resources, because they've certainly not increased their resources to cope with the additional workload. And since we last spoke, bounce back have come in, so the banks have got even more to deal with. However, the bounce back loan for most of the banks has been a very, very easy application and issue of funds process. So, as with everything, some banks are better than others, but most of my clients have seen an application for a bounce back loan approved there and then, and the funds being received into their account 24, 36 hours later, which is great. On the and again, the reason it's so quick, in my view, is that it's 100% guaranteed by the government. So really, the banks are just acting. They're just pushing paper really through to the government to say release this money to this business. When it comes to the business interruption loan scheme, I'm still seeing that process is still quite slow. It's quite cumbersome. I'm seeing that clients are still being rejected when perhaps they shouldn't be rejected, and therefore it's hard. It's hard. I've also seen cases where clients have been accepted for the loans, but the money still haven't materialised. So it's very much hit and miss. I would encourage all businesses to look at, as I said before, the support that is available from the government, and to ask yourself the question: if you are a viable business, or if you were viable pre-coronavirus, would either the bounce back loan or the business interruption loan scheme help you get through the other side of this? And would you are you I suppose a valid business in terms of being able to repay those loans at a future date?
Okay, thank you. I guess time to get your crystal ball back out for the final question, Murray. So there's talk that Boris Johnson will make some announcements this week of how he intends to restart the UK economy. As we learn, the devil is always in the detail, and I believe Rishi Sunak is due to launch an emergency budget in the next few weeks. With the enormous levels of government bailouts and spending during the past couple of months, I suspect that there really isn't much headroom for straightforward giveaways. What policy announcements do you anticipate that Boris and Rishi could make that are aimed at restarting the economy?
Really difficult, because I think what they will try and do is come up with something that addresses all sectors, and essentially, as we've seen with furlough, some sectors benefit from it, some sectors don't. But also what we can see is they like the concept of grant monies, because that's what the furlough is. The furlough is a grant. There are also grants towards rates and things like that. So I can see that they will adopt some new provisions associated with grants. I wouldn't expect them to look at supporting new businesses, because I do think there'll be a number of business failures. I do think there'll be grants there. I think that there might be some changes short term to some rates of taxation, and whether that's VAT, because we're no longer in the EC, that might be an option. But I do think with all of this is that in time in the future, we will all find that actually we'll be paying for this in some fairly dramatic tax rises, whether that's income tax, corporation tax, capital gains tax, don't know, but they've got to try and balance the books somehow.
Okay, thank you very much for that, Murray. Very informative. Time for a quick break for you, glass of water, and get ready for any questions that come forward. If anyone's got any questions for Murray, feel free to use the question box. I will ask them at the end. Rob, over to you. Thank you for being patient. So Rob, you were part of the Redwoods Dowling Kerr team when we reopened the head office last week, working with new social distancing rules. How are you finding working with the new rules?
It took a little while to get used to, but everyone has been very aware of the rules and obviously obeying the rules. Obviously, we've got a one-way system, and everyone is following the rules, and that's made it a lot easier. But for me personally, it just took a little while getting used to. But I think everybody collectively has worked together as a team to make sure that we follow these guidelines.
Good. And so when you're speaking to clients who will look to sell their businesses, how are you actually doing the business appraisals? Are they all taking place face-to-face?
Well, we booked a couple in face-to-face fairly recently. And there's obviously just being aware that we, keep the, the government guidelines, obviously follow the rules. So, meeting at neutral venues, or, meeting in obviously different locations. For example, we may have a meeting at our offices or whatever. But I mean, mainly it's been done by virtual appointments and video presentations so far.
And is there appetite for business owners in the childcare and healthcare market to bring their business to market at the moment?
Yes, owners still have retirement plans. Others have completely changed their outlook on life, looking to move on to new ventures. There are aspirations for obviously clients to achieve pre-COVID prices, but realism is that some movement may be required, obviously with the effect of COVID-19, but not all businesses have been affected. So therefore, it's important that we don't treat all businesses the same. And at Redwoods Dowling Kerr, we work with our clients on an individual basis, obviously to realise their sale ambition.
So are you using any different business appraisal methods now than you were before the pandemic?
Yeah, we're still using the same methods as before. However, we've introduced an EBITDA C method, which is earnings before interest, tax, depreciation, amortization, and COVID. So what we do here is we now look at what the impact has been, obviously because of COVID-19, if any, and then discuss what the mitigation plan is. The quicker the business returns to pre-COVID levels, obviously the stronger the sale price will be. But as always, it's a case-by-case basis. So if clients wish to speak to us on an individual basis, then obviously we can get in touch. But what we do look at mainly is what the plan's going to look, what it was pre-COVID, what it looks like coming out of COVID, plans we can put in place to make sure we get the best value for the client.
Okay, so have you made any changes during this period? Have you launched any other services to assist clients?
Yeah, so recently we've launched an energy saving cost service. So we've partnered with an energy aggregator, and we're able to access a broad range of energy suppliers. Our goal is to work with our clients to save them money on energy, and we can then use that to add back to their EBITDA, which will therefore obviously inflate the sale price. So as an example, for a care home, which saved an owner $16,000 per year on a 3-year contract, which then increased their sale value by $86,000.
Okay, thank you. Interesting. All right, if you hang fire, there's a couple of questions that will be coming your way soon. So Jenna, over to you. Thank you very much for waiting. Jenna, in your role, you focus on the childcare industry, which is an industry which has been greatly affected by the COVID-19 outbreak. How are you finding the current mood of the industry?
I think overall quite positive. I think what we all know within the childcare sector is that it's very resilient. And I think there's been some real positives to come out of it, which has been, all the operators working very closely together to resolve the current issues. And that's something that I don't really think we've seen before. I think the main downside has been the lack of direction from the government. And I think obviously everyone would agree that more attention is required to assist the early years sector, and this is a recurring theme. But definitely as we've started to reopen and children have started to come back, the mood has definitely shifted to a far more positive position.
Good. And would you say that the recent pandemic has deterred buyers?
No, I mean, I think there's been slight delays. So I think some of the larger corporate buyers obviously have got multiple settings, and they've kind of delayed moving forward with acquisitions as such, but that was to be expected because they've got to focus on the current business. Local operators, I would say, have taken the opportunity to really look at the market. They're already in the same locations, so they understand the demographics, and that hasn't put them off. So actually they've kind of had a head start on the acquisition front. And they've been very confident when submitting offers that they can get that business back to where it was. And demand is obviously still high, as childcare is a needs-based industry. Parents will always need childcare, and therefore, obviously, when supply is low and demand is high, the prices will remain strong.
Good. And how have you found lockdown? Have you had to go back to deals from a couple of months ago, or have you managed to keep things ticking over?
We've been fully operational, so we've had a core team working throughout the lockdown period. We didn't want to miss any opportunities or for our clients to miss those opportunities. So that's a decision that obviously we made. Buyer inquiries, we've seen a huge increase, which we are now able to convert into viewings and offers. So the viewings part was slightly tricky. So again, similar to what Robert said, you know, we were doing virtual, clients were sending us videos of the nurseries, etc. So we were able to get around it, but it was slightly trickier. But within lockdown, we have had 30 offers, which is, you know, a great amount of offers, with agreed deals valued at just under 14 million, and this is just obviously childcare only. One of which was a group of 4, one of which was a group of 5, and the rest were single site opportunities. So a really good mix of what we've already got agreed.
Good, thank you. Final question for you, and you'll need your crystal ball now. As we look forward to the later parts of 2020, what do you predict for the childcare sector?
Ooh, I think there'll be continued consolidation. I think those that have been most affected will recover over the next 3 months. I think what's keen, you know, really good to remember is that no operator saw any income coming in until probably September, October at the earliest. So I think the fact that we have reopened a lot earlier, you know, income is there, and it's there quicker than what we thought. A lot of people that we're talking to are talking about what do we do about increasing fees, which is, you know, quite a good debate at the moment. Living wages increase, there are costs that have increased to operators. So is this now the time that they will be able to increase those fees? And I think, again, because it is a needs-based sector, there will be those opportunities for those fees to be increased. And as we talk about unfortunate closures, that will obviously also bring some opportunities for other nurseries to actually reap the rewards and a higher occupancy for ones that have unfortunately closed. So I do think, you know, deal activity will just continue, and I'm envisaging a very, very busy Q4. Very, very busy.
Okay, well, I'll be coming back to you shortly with some questions. So there's a few more polls I'd just like to rattle through. So firstly, if you own a business and you are childcare or healthcare, and you are on this webinar, will you be seeking to acquire a business, an additional business, or if you're a first-time buyer, will you be seeking to acquire a new business in the next 12 months? So people are clicking away, which is good. And we will close the poll in the next 3 seconds. 3, 2, 1. Thank you very much for that. Next one is a flip of this. So if you own a business, are you thinking of selling? Rob mentioned some people have had enough. The pandemic, the changes from a variety of regulators, national living wage, etc., etc. It's interesting for us to find out if people are thinking or considering of exiting. So just three more seconds there. 3, 2, 1. Thank you. And then finally, we will be all polled out after this, won't we? So and forgive the direct plug, but we have been doing some phenomenal savings for people on gas and electricity. So many businesses who obviously work in their business, they don't necessarily take time to review it. If you'd like us to take the load off you and review the market and see if we can get you a better deal, then please just click yes, no, or if you're undecided and you want to think about it, maybe. We did a deal yesterday where it was £30,000 a year for a group of 2 care homes over a 3-year deal. So there's plenty of value in the market at the moment as oil prices have absolutely plummeted. So 3, 2, 1, right. Thank you very much for that. So question time. First one's for Jenna from Mark. Hi Jenna, are you finding that buyers that are new to the childcare market and haven't got experience are more nervous than those already in the sector that are confident, as you say, that we will bounce back and are already seeing numbers return to buyer inquiries return to pre-COVID numbers?
A tough one, because I think it's each individual. Current operators, you know, they've not. This is the first time we've been through a pandemic, but it's not the first time the childcare sector's had to get over an obstacle or a hurdle. So I think if you're a current operator, you are used to, you know, getting over that and know that things will always come back and that there will always be the need and, you know, and provision for childcare. So I do think it is easier for current operators to have more appetite to, even if there is slightly more risk. But then what we have seen is an increase in first-time buyers and new entrants looking to get into the sector. So I think what they have seen is that although this is an unprecedented time, etc., that actually everyone is still continued to get some form of income. There has been grants, etc., available that have helped the sector. So actually, I think it has slightly put them at ease. But yes, an operator will obviously be quicker at maybe acquiring now.
And then a second one for you, which you may or may not be able to exactly answer, but you will have some clients who potentially will give you an insight. How are the loans to acquire a new business? Are they still available for banks? So I'll reshape the question. Are you seeing deals, offers on businesses where people are bank funded?
Yes. So we've had a lot of conversation with the banks and advisors. They're not saying that it's a no-go. We've never had one bank said that they will not continue to lend in the childcare sector. What they are saying is there's going to be more due diligence needed, which is what we expected. And back in when we did our first webinar, that was what we were drilling into our clients. You know, you are going to have this information ready. So we've got one currently due to complete in a few weeks with Santander. They've sent through a COVID due diligence questionnaire, which basically covers July, August, September. I think the main focus will be what is that September intake, and that is where the owners need to really focus their attention on where is that occupancy going to be and where's that income going to be. And the banks have said, you know, as long as we can see some form of back to normal, then that they don't have an issue lending in the childcare sector.
And final question for you, Jenna. Do you know how many nurseries have closed permanently due to lockdown?
No, not yet. I think that obviously information will come out in due course. Back in March, when this survey was originally done, which was obviously at the very beginning, it was predicted to be 1 in 6 nurseries would close permanently. What I would say is those that we've spoken to that were a bit on the edge, because the confidence has grown in the sector, and like I said, we've got back to generating income far earlier than we originally thought, I think that will be a far less number.
Okay, positive, good. Rob, I guess I'll flip to you. If there are people who are struggling, who are thinking of closing their nurseries down, are you able to offer them any assistance?
I suppose what we would offer is, looking at if there is a sale opportunity there. So we would look at their opportunity, whether there's something we can do to, guide them, and rather than closing, just maintain it, keep it open for as long as possible, so we can obviously see if there's potential clients out there that may purchase. But yeah, I mean, I suppose if they're struggling and, rather than closing, or even if they do close, if they own the freehold, is that we can look at a sale opportunity from there for them.
Okay.
Can I just say on that? Sorry. Can I put in just to say that on the offers we actually received last week, 3 of them were on recently closed businesses that had made the decision that they weren't going to open. So they'd made that decision they didn't want to open. And actually within one of them, the very next day, we had the sale agreed on it. So we obviously re-looked at the price, looked at the opportunity, and a lot of buyers are looking at D1 opportunities, and things like that. So I definitely don't think if that is a decision you make, that should deter you from thinking you're not worth anything, because you absolutely are to an operator.
Good, interesting. Murray, back to you. I hope you've enjoyed your rest. We've got 4 questions for you. So first question, Murray, are employers forced to pay the 10% in September, the 20% in October, or is this optional if we don't have work for them to do?
Okay, I'll answer it in a slightly different way. The 80% is the agreed minimum that you can pay your staff when they are furloughed. So you may choose to pay them their normal rate of pay, 100%, and I do have some clients that have furloughed staff that have kept employees' rate of pay unchanged, but 80% is the minimum. So again, going back to the weaning off, there is a top-up required by the employer to maintain that 80%.
Okay, we've got a question from Mike. Question for Murray. For employees who have left employment just before lockdown and had something lined up, but it did not come to fruition due to the lockdown. Is there any furlough or additional support schemes for them?
Well, that under that scenario, that what the employees should do is go back to their former employer and try to have their pay or their furlough claimed through that former employer. And again, I have a few clients that have done that, where we've been unable.
I think the question relates to once it comes off that period, you know, when the employer has to contribute.
Right, so ask the question again.
If after the period of July, when we hit August and there is contribution, obviously that employer then won't retain them on the furlough. Are there any other schemes available?
Not aware of anything, and I think this might be the 12th of June guidance that we're waiting on, which might clarify how that would work. But there's nothing in the recently released emails, etc., or information on HMRC's website to help us with that.
Okay, and final question. If a business is acquired now with current owners under furlough, can they still receive furlough post-acquisition?
Well, I think it's probably a legal question, isn't it? And it's probably linked to, are they being retained as an employee of the business, and are they is their work available for them? If they're being retained as employees, but if there is no work for them, then I don't see any reason why they can't continue to be furloughed. But it's probably more of a legal question than an accounting question. But yeah, I think it's certainly feasible.
Great. Well, that brings to a close today's webinar. If anybody wants to ask any further questions or speak to any members of our panel, they can email webinar@redwoodsdk.com. That's webinar@redwoodsdk.com. And I would like to thank the panel today for taking part and wish you all a very good day. Thank you very much.
Thank you, Andrew. Thanks. Take care. Bye.